With just a week to go until Donald Trump takes office, Canada's premiers are continuing the push against his threat of tariffs.
I myself have had numerous meetings with governors, with part of the incoming secretaries, and a number of other congressmen and senators, as other premiers have. So there is that subnational outreach, which is important.
We should continue to have a tariff-free relationship between the U.S. and Canada. And I think that the bedrock of that tariff-free relationship is energy. The more we make those arguments, slowly but surely, we'll be able to make the case that we should continue to enjoy a tariff-free relationship.
Trump claims the tariffs are needed to balance a $200 billion subsidy from the United States to Canada, due to what he calls a growing trade deficit between the two countries. But a new report looking into Canada-U.S. trade challenges Trump's claims and finds the trade deficit in 2023 was closer to $40 billion and that deficit is shrinking. The author of that report, Jim Stanford, joins us now. He's an economist and director for the Center for Future Work. Jim Stanford, it's good to see you again. Thanks for being here, sir.
Thank you for having me, David.
When I took this job, they told me there'd be no math, but Donald Trump has kind of made that impossible. So he's claiming a $200 billion trade deficit subsidy. You say the number is nowhere near that amount. Explain the difference.
Neither the number is right, nor his theory is right, David. Literally, he just made the number up. There's nowhere is it reported that the trade deficit between Canada and the United States is $200 billion. Yes, there is a bilateral deficit. We sell them a little bit more than they sell us. Now, remember, that is a $1 trillion two-way flow. There's a huge flow going both ways. So the balance is small as a share of the total trade. In fact, smaller than almost any other major U.S. trading partner. They have the most balanced trade with us of almost all their partners. So it is much smaller, 1/5 of the size of what he says, and it's probably actually even smaller than that, because that number does not count a lot of the U.S.-based services that we buy, especially digital services from companies like Meta, Facebook, Uber, Google, etc. These are companies who take a lot of money from Canadians, but most of what we spend for them doesn't show up in the official statistics. So in reality, it's even smaller than that.
Right, because it's not a physical commodity crossing the border. It's just an electronic transaction where Canadian cash goes to U.S. bank accounts. It's not included in these calculations.
Exactly. It's very hard to record and measure those services flows. It's hard to regulate them, and they're largely untaxed as well. So this is why Mr. Trump never talks about services. He only talks about merchandise and container ships and that kind of thing. But in the services area, the U.S. dominates because of those big technology and finance companies and other service giants. And so, you know, he just kind of puts that in his back pocket and then comes after us on the other stuff.
So much of this, though, Jim, it's energy, right? It's commodities, it's oil, and that means this deficit, as let's just use that for shorthand, that's going to fluctuate wildly based on the price of a barrel of oil, is it not? Like, it's not a structural imbalance in basic goods. It's really that rogue wave of global commodity prices could influence it.
For the most part, yeah. Now, remember, the U.S. has had a trade deficit with the world for the last 50 years. So there is a structural issue in U.S. trade where they have an ongoing deficit. Now, is that a good thing or a bad thing? You know, it's a bit of both. For the most part, it's because capital is always flowing into the United States. It's a safe haven and people like the assets. Right. And that gives them the money to spend so that they can actually consume more than they produce. That's what a trade deficit is in the long run. Now, their bilateral deficit with us has a lot to do with energy. About 60% on average over the last decade of the bilateral deficit has been in energy, and it does go up and down with the oil price. That's the main reason the trade deficit is shrinking right now. But all the other stuff we sell to them is virtually the same. I estimated in the report about 76% of Canadian exports to the U.S. are not finished products. They are inputs and raw materials and parts and semi-finished goods that then go into the U.S. economy as inputs to the operations of U.S. firms. And this is a reason why the U.S. putting tariffs on imports from Canada is going to be completely different than putting on imports from China or South Korea or something. The supply chains are so intertwined that punishing Canadian imports to the U.S. is actually hurting Canadian businesses, hurting American businesses, not protecting them. And this is another way. The economic logic is just completely counter to what Trump is proposing.
Right. I think Danielle Smith was outlining the ratios that for every dollar of oil they send to the United States, they refine it and turn it into $3 of oil, right? So if you're buying something for $1 but selling it for $3, you shouldn't really complain about that relationship, right? So if you do accept the fact, as Trump does seem to, that there is a trade deficit between the two countries and it's something he wants to fix, how's the 25% tariff fix that or help that in any way?
Especially when so much of what they buy is stuff that they need and they can't do themselves anyway. So I know Premier Smith talks about oil all the time. I think she's trying to get oil carved out of the situation. But exactly the same logic applies to the things that other provinces sell to the U.S. as well. Auto parts, for example. In manufactured goods, this is stunning, David, about 25% of the value of all the manufactured goods we sell in the U.S., including automotives, aerospace, telecommunications equipment, 25% of that value was made in the United States. So if they're going to punish Canadian manufactured imports, they're actually going to be punishing their own firms that supplied so many of the engines and parts and transmissions for cars and all the other parts that go into Canadian-made manufacturers. We've had 30 years of intertwining the supply chains between Canada, the US, and Mexico. And to try and rip them apart is just going to cause chaos on both sides of the border. Absolutely both sides of the border.
So corporate America knows all of this, right? The industry associations in the United States know all of this. The governors, the senators, the congresspeople, they know all of this. And the data is pretty clear. So how do you approach President Trump when presumably he knows it and doesn't care? His team around him must know it, and they don't seem to care. I mean, how do you approach something like this when the math is so obvious?
Well, I mean, we're all scratching our heads on this. I do believe that Trump knows this. You can say a lot of things about the president-elect, but I honestly wouldn't call him irrational or insane. He's got some kind of strategy that he's following, whether it's to create leverage in negotiations over other issues like the border or defense spending, et cetera, or whether he's got more sort of nefarious expansionist ambitions, which we're all worried about right now. But this is where I'm not naive enough, David, to think that winning an economic argument is going to change his mind. No. But I do think that showing the American negotiators and showing the Canadian people and the American people that we understand this is not charity. They aren't bailing us out. They are benefiting from this relationship at least as much as we are. In fact, in some interesting ways, we probably subsidize them, not the other way around. And showing that we know that and are confident in our capacity in this relationship, rather than, bowing down and saying, please, sir, don't hurt us, I think will help our negotiating situation.
Interestingly, it was Stephen Harper, the former prime minister, on a podcast today, said much the same thing, that Canada actually probably subsidized the United States based on the change towards a more service-driven economy. But I just wonder, just as a final point, Jim, if you look at where you put the actual trade balance, how does it, the U.S. is the biggest economy in the world. This is the most successful economic relationship probably in the history of the world in terms of what flows back and forth across these borders every day. How does the trade imbalance compare to the other U.S. partners? Because it's going to be higher given the volume of trade, it seems, between our two countries. But structurally, how does it compare?
No, it's actually lower, despite the fact our trade flow both ways is the biggest. So Canada ranked 10th among the U.S. in 2023 in the size of the imbalance. And our imbalance, our surplus, their deficit, is a fraction of the size of the U.S. Deficit with China, with Mexico, with Germany, and the others. So again, there's no way that you can say that, first of all, the trade deficit period is a problem for the U.S. They've had one every year for 50 years. So there's nothing new and nothing dramatic, nothing emergency about this. Number two, you really can't say that it's the problem of Canada.
Jim Stanford, always appreciate the time. It's good to have you back. That's economist Jim Stanford. Thank you, sir.
Thank you, David.